Hey guys, welcome back. Carter, BitsBeTrippin. Glad to have you back. We're going to pull back a few things that's happened over the last weekend and really where we're setting up, I think, to get into December when it comes to Ethereum mining. We've obviously seen a few things that's been going on with that. We're going to talk to that track. We're also going to talk Bitcoin ETF. What's it mean to, the average Joe? How does this help potentially solidify the space for people that have been sitting on the sidelines? What's it really mean? And then really, if you're mining other stuff, you got Ravencoin's halving coming up. You have Firo changing its algorithm. There's quite a few things in the space when it comes to GPU mining going on. I received a ton of emails from people saying, what's the strategies look like moving forward? Let's peel some of that back. And before that, let's take you to today's sponsor. Decentralization is one of the most important factors in a global cryptocurrency network. Bitcoin's proof of work functions due to the exceptional security provided by the miners of the network. Today's sponsor is Compass Mining, a company with a customer-focused experience providing a tailored approach to purchasing, hosting, or even an at-home option, allowing anyone the opportunity to participate. If this interests you, head over to compassmining.io. All right, guys, we're back. So I'm going to first start with the Bitcoin ETF. You've seen some of the run up into $62,000, I think, yesterday, and we've seen a pullback a little bit. This could be a situation where people are going to sell some of that news. The ETF officially has not been accepted by the SEC. However, they're moving forward with that tomorrow to where that exchange traded fund will start. So exchange traded funds, there's a ton of sources out there to explain what this is, but bottom line, how does it change, this space? Well, it's a futures contract, so it's not necessarily spot price. So it's not going to be like 1-to-1 with the current spot price, but it gives people an additional mechanism to get exposure to cryptocurrency. So the folks that follow this channel, people that follow cryptocurrency pretty closely, if it's crypto Twitter, and you guys that have been following for a while, we feel pretty comfortable going out and buying things on exchanges if we're using apps such as Coinbase, T0 Crypto, Crypto.com, all of these different liquidity centers. Most people are just buying the asset themselves. They're putting it into their portfolio. They're downloading, have a personal wallet, not your keys, not your coins kind of thing. You're using treasures to store locally. That is actually a microcosm of the actual exposure to crypto. As much as we get tunnel vision on that, the reality is if you were to drive down your road and just like look at everybody in your neighborhood, look at anybody that you have, first and secondary exposure to, do they know about crypto? Do they know how to get crypto? So, that question by and large, unless you're surrounded by people that are in crypto, is they know about it, but they really don't understand utility around it. They're asking each other and maybe you on how that utility works. And their exposure is going to be through like a fund manager or through some other mechanism that gives just some light touch exposure, not really taking the assets themselves. So when you're looking at the mass amount of people that can come in, things like Bitcoin EFTs, things like what Grayscale is doing for institutional investors, gives people exposure to the space. Now, those entities have to take ownership of some crypto. So that's where you get the lift on the supply side, where people take supply out of the system and it drives price up, especially on fixed assets like that have upper bounds. We're talking Bitcoin, Litecoin, things that don't have an upper limit. Things that have a very small amount of inflation too can have that same effect too, as these exchange traded funds and other mechanisms start to put a drain on that supply. So as more people see the acceptance of crypto, you're going to have a natural push on that supply. Halvings help reduce the amount of inflation, which then you guys see how that kind of works. So, this is a bullish news, obviously, but until you start seeing really big institutional investments coming in, Fidelity, crypto services, when you can go into open enrollment and you can see when you're going through, if like you work at a company, I'm using this as an example, and you're clicking through your open enrollment and you're maybe in your Fidelity account and you're like, hey, I want to put 5% to my 401k because my company, puts money in too. you choose the different funds. For me, it's like the 2040 fund, and that's kind of the less risk kind of thing. Having an option in there for crypto where you can put up allocation, maybe 5-10% of your 401k into that. Those kind of mechanisms then would snap back to Bitcoin EFTs and some of these other offerings like Grayscale and stuff. So it gives people organic exposure to the asset themselves on a limited supply network. So, a movement forward, I think, is a positive thing. It's what's been looking for a long time, that Bitcoin would finally get an EFT. Looks like it's about to occur. Again, regulatory environments haven't came out and rubber stamped it yet, but they're moving ahead. There was a deadline. That deadline has passed, and they're moving forward, right? So there could be a chance that SEC never comes out and says, "Hey, we officially approve it," but it still has met. They have met the obligation through the time frame, and now it's moving forward. So, what are we going to see in the short term action? Who knows? I know there's a lot of speculative discussion right now that Bitcoin could hit in the hundreds of thousands by December. We've seen over and over and over again in this, where Bitcoin starts to really react in that kind of late November, early December, and then we carry into the beginning of the year with usually a huge pump. We saw it with 2017 into 2018. We saw it last year with the rise of Bitcoin, essentially following the $10,000 factors by day. So it was 26th of December, it was 26,000, 27th of December, it was 28,000. Are we going to see that from a standpoint of, the 60,000s? Are we going to see, December 27th at 67,000 and then going that way? Who knows? But just to know that this new mechanism does allow some growth here in the space. So let's change gears quickly back to Ethereum and what's going on with Ethereum's network. Ethereum right now is about 750 terahash in total hash rate. October 17th, it actually hit, the beginning of October 17th, it actually hit its all-time high at about 755 terahash. So what this means is even with some of the trying to pull back and some of the equipment, there has not been a lot of hash rate that's came off the network. So either one, folks in China are still mining, or two, some of those early ASICs that we're talking about, the next generation ASICs, the Phoenix, the Lindsay miners that are out there. iPolo has a 5.5 gigahash miner, that they're supposedly selling here, that are probably online right now and they haven't put them out for sale, are coming online. At least that's when they notionally said that they were going to come online, and seeing this huge spike, the change from 550 terahash when we were looking around September to 750 terahash. The network has more hash rate than it's ever had on there, which if you're mining Ethereum, you obviously have seen that plus the EIP 1559 burn, your yield is reduced. So you're getting less yield. There are spikes during like NFT launches. I know I've had some people ask, "Hey man, I was watching the blocks and I saw a couple blocks, like 5 or 6 blocks that have over 120, 130 Ethereum in a single block." And a lot of that was the payment and the MEV arbitrage that happens when you're doing stuff like that. So, all right, when you guys see large blocks like that, it is because folks are trying to front run each other up or pay more gas fees to get that NFT. So you will see a series of blocks every once in a while that are like that. And then hopefully you're mining to a pool that is lucky enough to win those blocks, which then it would give you a spike of additional revenue. That's the kind of hard part when we're talking about if, your average rate of return right now is kind of low because there's a lot more people mining on the network. But then you'll have these spikes where there's hundreds of ETH on a single block, which then you'll be getting a standard payout for, let's say, a single rig. And then you'll get like 2 times, 3 times that payout on a single block, right? So like you're averaging on a single rig maybe 0.1 ETH a month at this point. And then you'll get a payout about 3 weeks in, and you're like, wait a minute, I got an entire month's payment in 3 weeks instead of the 4 weeks. Well, that's because that, a few of those large blocks were picked up by the mining pool that you mine at. So those are kind of signs of relief from a miner standpoint, that you get an extra amount of Ethereum for your hash rate because there's a lot more being distributed to miners at that point. Now let's talk what this looks like on the merge side. Merge has been, it looks like notionally moved through at least March. They have pushed the difficult bomb out to May. which gives them some testing time. And there's discussions that the testing lead time will be longer for the merge than a standard, once a merge EIP is accepted, then they would go through testing phase. This testing phase has been extended out. So bottom line, it's looking like 8 to 10 months right now that you're going to be able to continue to mine Ethereum. I personally think it might be a little longer. It might be next year this time to when they go, now that I've done a little more research on where they're at and kind of what the steps they're going to have to go through. So you could see maybe in October of 22 merge discussion launch, which, gives everybody almost an entire year. But I would say your short-term potential is March. Your long-term potential is current right now for 1 year from now. So people that have been mining for a while, if you're trying to understand your ROI and that's, again, all of this all comes back down to, is ETH's performance going to exceed, $10,000 in ETH? Who knows, right? You should model and look at what current is, and then understand that you're probably still going to have a continuation of growth of hash rate up until the 10 cent per kilowatt ends up being not profitable. So you're going to see where a huge amount of folks that are mining right now, if they're paying 10 plus cents per kilowatt, we'll have those figures to you guys later this week in an Excel model that I think will help express, where you guys sit in the stack on that, depending on your power costs and your efficiency, if you have like newer cards versus older cards. So I've been working on that model for a while. I can't wait to bring it to you guys. Now, lastly, and I'll close out, you got Firo doing its upgrade to the prog pow type of algorithm, which would put it a lot like the same configuration as Ravencoin. And you have Ergo and a few of the other coins still pressing on with opportunities there. What it comes down to is, as ETH starts to really press more, if it gets into 800, 900 terahash, and if the price stays the same, then some of these other coins are going to be what folks are going to switch over to. So unless there's some additional price discovery, it's going to start to get tight if we don't have any price discovery. So that's what it comes down to from a risk standpoint. Obviously, everybody's looking at their margins and their profits right now on their mining. We're going to look at what that looks like and what some of those price discoveries have to get to kind of offset that. So again, another update to the mining model that we'll bring to you guys for that. We've been working on that for a while now, and it's about time to bring it to you guys on that. So hopefully some of this, there was a lot of discussion kind of setting things up for you guys. I know talking head videos you guys don't always appreciate, but hopefully some of this you guys were able to glean what's going on in the space, and I will catch you guys later this week.